Hello guys, welcome back to my YouTube channel. If you are new to my YouTube channel, please give this video a like and subscribe to my channel. Let's get to 1,000 subscribers. So in this video, I'm just going to teach you guys how to set profitable limit orders in the market. So the first thing you need to do in the market to be able to set profitable limit orders that can actually make you money and increase your win rate is the first thing is to understand the market structure. So what do I mean by the market structure? The market structure simply means whether the market is bearish or bullish. So in this scenario, you see that the market is making higher highs and higher lows. So what we call this is a bullish structure. So when market is making let me look for where I can explain a bearish structure for you. Okay, this is a definition of a clear bearish structure when the market is making lower highs and lower lows. As you can see, the chart is just going lower highs, it's creating lower highs and lower lows. So how exactly do you set this profitable limit order? So let me use this bearish structure for example. So I'm going to be using a line to explain what I mean. So this in this kind of market, you want to look for a place where prices has the chance of price to react from that levels are very high. So the first thing you want to identify is where large sell orders were placed or large buy orders were placed. So in this case scenario, because this is a bearish structure, right? So in a bearish structure, you want to only look for sells when setting limit orders. So in this case scenario now, I'll use this level as an instance. Sorry, I don't. This is not the line I want to use, so I'll clear this one. This is the one I want to use. So in this case scenario, look at the place I'm placing this line right now. At this level you are seeing right now, this is a level of a reaction level. So before price we actually get back to this level, because let me reduce this so that you understand exactly what I mean. So from this level right here, from this level, you can see that there were large sell orders in this level, from this level that this line is above right now. So you see that price moved sell orders right to this place. So there were large sell orders that were placed at this level, which gives us a place where we can actually wait for price to tap into for us to place another order, which happened to be this level. So all you need to do is to set a profitable limit order here. You want to place a sell limit order at this level right here, right at the candle that moved, right at the candle before the move, which is usually like this. So you want to set a sell limit order right in that candle. So what price will do is that, and set your stop loss right above it. So what price will do that, price will actually retrace to that level. So price will definitely tap into that level, and when price does that, you can now catch a sell. And if you notice, you will see that immediately price tapped into this level at this range, you will see that price dropped drastically, because this is a place where large limit orders were placed. So price immediately went down and hit the TP. So your stop loss, you just place your stop loss right above the level and then target the low side, or you can even target twice as much. Maybe your 1:3 risk reward will be at this level, or right now at this level. This should give you a 1:3, because if you should place your stop loss right at this level, and this will be a 1:1, this should be a 1:2, and this should be a 1:3. A very clean trade. So same thing applies to when the market is making higher highs. So in a bullish structure, you want to look for a place that price will react from. I'm looking for a good opportunity I can use to explain what I'm trying to say. So let us take this level for an instance right now. This level right here, this is a level, this is a reaction level on the bullish structure. So right here, right now, you want to see, you see that, you notice that price actually price was creating higher highs and higher lows. As you can see, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So immediately price broke this higher high, you will notice that price actually started retracing. So someone else might think that, oh, price is going to sell from this level. So you actually see that price was actually coming to tap into a level where large buy limit orders were placed. If you check this place, you're going to see that at this level that price tapped right into, you're going to see that, like I said, you will always place your limit orders right on the candle before that large spike. So this is the candle, this is a small candle right here. This was the candle that led to this bullish candle. This is the candle right here, this particular one. So you're going to place your buy limit order right on it and wait for price to actually retrace to this level. So immediately price came to this level, you see that price immediately tapped in on this level, immediately tapped in, and price went going crazy, creating because as a result of large buy orders were placed, price immediately moved to the upside. So this is a way I use to set profitable limit orders so that you don't stretch yourself all the time watching the charts all the time. Do you understand? So you can be able to make profits doing that. So if you notice here, you notice that in this particular place now, you notice that price, this way is a place, this actually, I think this should be a news place where there was the news that led to this massive spike to the downside. So you will see that merely price took out the liquidity at this level. Price took out the liquidity at this level. What you expect is that price is going to begin to reverse. So once price has started reversing, what you will use to confirm that price is reversing is the points where price has, after taking out the liquidity, which is this upside right here. This is the liquidity, because when traders entered sell limit orders at this level, they usually set their stop losses maybe somewhere here. So price has taken out the sell orders of traders. So sometimes you need to wait for confirmation before you enter any sell. So what you use to confirm that, okay, this is a price reversing, is when price has broken a lower low, which is at this level. You will notice that price first broke this lower low right here and broke the second one. So you will now confirm that, okay, I can take sell trades from here. So you will now notice that there's something that price did here. Price retraced and tapped into this level. Do you understand? Price retraced and tapped into this level. This is a level of a level where traders usually look for when they are setting their limit orders. If you check from this level, you see that large several orders were placed. So price actually came back to retest this level, and as we always do, you will set your limit order right below, right on the candle before the massive move, and you set your stop loss right above it, somewhere around this level, and then you take profits 2 or 3 times as much from what you are risking on that particular trade. That way you'll be getting a good risk reward. So I don't know if you understood this video. If you didn't understand it, you can as well go and watch the video and tell me and drop your thoughts in the comment section. Thank you for watching this video. I hope you might have learned 1 or 2 things from this video. See you in the next one.